Welcome everyone to the Kindle Report. It is Wednesday, and hope everybody had a great holiday and all that good stuff. Tonight we're going to talk about something I think that is coming up. It's just classic. As you know, I'm going to be out of town first part of next week, and in fact, I just want to put it out there right now that the original thoughts were I was going to come live on Sunday. There's not going to be a Sunday broadcast this coming week. So I will do my best tomorrow to set up the week. It's possible that I could put something together quick as an overview on Saturday. It just depends on what's going on. Unfortunately, I'll be out of town all the way, won't be back until Thursday. So the next video after tomorrow will be Thursday, only one next week. After that, we should be hopefully back to normal after my little excursion. So thanks for being patient. There's something that it was interesting. I watched a little bit, not a lot of Bloomberg today, but there were a couple of the usual anchors that are on, and they were all giddy because they're like, oh, everybody's going to underestimate the employment report on Friday again. So it's just going to keep coming out better and better and better. I get this sense, there was a couple other things that happened. Sometimes I get triggers, and it's one of those things that go, uh-oh. And the uh-oh was, maybe things don't come out so good. We get ADP tomorrow. Maybe they're starting to be a little surprised. They've got, I'm going to do air quotes, Bidenomics, right? Biden's so good, everything's so good. And, you know, I've been positive on the economy, and I still am. But it's just kind of interesting. It's like, it feels like an interrupt coming, maybe something like that. I saw somebody make a comment to that effect right before I came live. And that was my narrative as I was talking. So we're going to set up some things for you folks to watch. I'll do my best between tonight's video and tomorrow night's video to get you set up pretty good. But I think we may be coming into an interesting juncture. Now, from the standpoint, if you're running portfolios in Wavetech or in PortfolioXpert, it's not going to really be material. I don't see us having a big blip, but those index traders out there, just pay attention. There may be some interesting things coming up. Like I said, the algos have been kind of trying to suggest we're going to roll over for a while on the dailies. There's still some really good uptrends. So I'm not actually predicting any kind of collapse of any sort of big things. We'll go through the technicals here in just a few minutes. But let's just talk about from some of the things that we saw today. S&P down just a little bit. NASDAQ down 0.18. S&P down 0.2. Russell got hammered again, 1.26. Banks were under pressure again, so that's going to, the regional banks and the community banks, so that's always going to hammer that index. I'll go through those as well here in a few minutes. But one of the things that I think, I'm trying to read my notes here, that I feel like that we might see, we did see factory orders come in plus 0.3. But we get on Thursday, we get the mortgage index. We're going to get ADP. That's expected 245. Claims 250K plus. And then we got continued claims 1.742. And we also get the ISM non-manufacturing 51.1, still in expansion phase. But let's just talk about the ADP and the claims. There may be a reveal. I'm just feeling like that there could be something happening here, maybe claims increase. Markets are very sensitive, I think, from the standpoint of where we are. It's been quite the rally, basically to 4,500, and now we're starting to see, I think, some cracks and things to be aware of. I said from index standpoint, I think there's some risk that is starting to show up, and like I said, from a portfolio viewpoint, not so much. Database is pretty solid. What I'm going to talk to you about tonight as far as the database goes is actually the yesterday's database. I'm lagging because of the time that I'm doing the videos now. So we'll talk about, there really was nothing going on today. It was pretty quiet, to say the least. There was some volatility, but there wasn't any real major material movements that go on. So I think it's going to get really interesting as we come in. The minutes from the Fed came in, maybe a little blip there when they released. Nothing there. Nobody really cares. The other thing is, it will be interesting, is I had originally the headline for tonight that employment to fail is bad news, good news. Okay, so we could still get a bid out of bad employment news, because you know what that means. The Fed's going to pause. They're not going to raise this month in July. And as it turns out right now, I think the Fed fund futures, which are probably one of the worst predictor of anything, but they're at 80 some odd percent, that there's a 25 point BIP increase here. Maybe this employment report could change that sentiment just a little bit. So we're going to keep an eye on this. Like I said, I am going to be largely absent in the next over the next week. So I'll do my best, like I said, to set some things up. I'm not even going to really have the ability. Maybe in the evening I might be able to put a couple of things out on Twitter, but it's going to be somewhat sparse. Okay, it's just putting that out there. So let's go ahead. Let's get through the video tonight. Should be fairly easy. I think tomorrow night's video, I'll spend a lot more time trying to get things together. And I would just tell you, if you've been waiting for the indicators, I finished the last video today from the standpoint of the training, and we should be releasing these things really soon. I know you've heard week after week, it's next week. It's been a big undertaking. So we should have things together pretty close. I'd like to tell you tomorrow, but I can't guarantee it. There's a couple more things we have to get done. So hopefully this evening, I'm working when I get done talking with you folks. So let's go ahead and get into tonight's video. I think you'll find some of these points pretty interesting in what I'm seeing. And so let's go ahead and start with yesterday's database on Wavetech. Okay, sorry, it takes just a second to get the transition over to the other desk here set up. So here's what we got going. We're looking right now at 66.13% bullish. I don't expect this to change much after today's run. Of course, this is yesterday's numbers, but you can see here, just looking across the board, we got actually 1,000 buys for today, 206 sells, so quite a little bit of a positive rotation. And I think we were down around 62-ish, and so we're back at 66. So things are stable here from that standpoint. So I don't see, like I said, from a portfolio standpoint, if you're using Wavetech, your PortfolioXpert, in one of our institutional accounts, I would not be worrying about what I'm talking about tonight. I think it's just more, it's something that happens with me when I see some of these guys out there just, always expecting the same. I mean, these two women that were on Bloomberg today, it just like set me back. I'm like, whoa, they're not going to be right. It's not going to be another outperformance. And I think, between the White House and everybody in this whole Bidenomics, and I was around in Reaganomics, I'm that old. So I don't think so. I have, like I said, been talking about how I believe the economy is in pretty good shape. It's not in a recession. but it's not like this robust environment either. So we're just seeing really just some of that potential rotation. Originally, if you recall, going back just a minute, and I'll get into the technicals in a minute, but I was talking about 4,400, 4,600 going back maybe early last quarter, and that has been really pretty much satisfied from that standpoint. And so let's go ahead and let's go get into the technicals here and see what we can uncover. Okay, as always, we'll start with the hourly chart, and we're just seeing the futures kind of about, I think they're going to roll over here as we come in, whether it's these numbers that we've got coming out, the claims, or all these numbers we have coming out that are going to try to maybe roll this market a little bit. Looks like the 200-day or 200-hour moving average could be in play, 44.38. And we'll go through the market grid and the daily numbers here in a minute. I think one of the things I will do a quick reveal here. These are what I just put on the screen here. What you're seeing is the hourly chart with the daily market grid projected right on it. And it also has the expectations for the next day as well. So this is one of the releases that's coming out as well. So now you can put this on any length of chart, 1 minute, whatever. The numbers are all going to show up. So it's going to be a lot easier when you're trading and using some of these things. Well, yeah, just to kind of, since we're so close, there is some new suite. There's some really strong focus points where we're going to be able to identify some windows, buying and selling windows. So I think you'll really be excited to see these when they're out there. But this is, looks like you can see the algo's trying to roll over here right now from that standpoint. And it looks like we're going to roll down toward the 200. This is 50 bars out, so that's way too many days out, but we should see this, and you'll see the scenario that starts to set up here as I go to the daily chart here. And you'll see, been talking about this thing starting to roll over. We caught a little bit of a bid again in the PPMs, and they pushed back, and they've been staying just above these moving averages. I'm going to blow this up just so we can get this a little bit more in focus here. Let me get rid of some of this stuff here. But yeah, so you can see is we're really starting to set up a similar pattern. And I mentioned this before. If we go back in time when we were over here at the 42, 4,300 level, we kind of got this little pattern like this. We're getting another one. And it looks like we're going to try to challenge, probably over the next several days, we're going to challenge the 10 and 21 period moving averages. I'm still kind of hung up on this idea that I talked to you folks about last week, that ultimately we're going to see the 40, which is also the 10 week. And that's going to be, I think, where we finally find some traction. So this is why I'm trying to caution on my comments here, that I'm not looking for some big giant rollover and a top and a multi-week type situation, but it could be, but I think it's limited. And I'll just bring up here while we're, let me bring up the market grids over here on the far right-hand side. So R1, 42.92, we kind of bounced around that today. S1, 44.79, but we're looking at S2, 44.65. I was just showing you the hourly chart. Looks like that we could at least decline in there, and 56 is a number where we could see as well, which would be 44.56, be an S3. So look for probably R1, S2 tomorrow. Maybe we can break back above 4,500. Not sure. With the ADP and some of these numbers coming out, I just have a sneaky suspicion. If you recall, just a few weeks back, when we got some negative numbers on the claims, everybody got all nervous that things are kind of rolling over. And it just may be that point in time. I was originally talking about I was going to be pretty positive on the markets coming into Q3. Well, we're kind of there, but not very far into it. But there's going to be, I think, some challenges and some things to look at. The sell in May and go away was never a thing this year, but what we are seeing is just really this pattern that is trying to complete, but I think it's still probably some kind of ABC 4-wave, something like this here, that we come down into the 21. So let's go to the weekly real quick so you can see this. And this is what I'm talking about here. That angle of attack on the weekly is still pretty positive, but if you start to look out several weeks out, it's suggesting that we're going to get challenged. It's probably 2 weeks out. If we do break the first derivative here, that tells you that we should challenge the 10-period moving average. We break the second derivative, we're probably going to roll through that into the 21, but it looks to me that this somewhere around that level is going to be pretty solid. That's 4340, somewhere between 4,400 down to mid 4,300 again. So as much as it feels like we were off to the races, we really aren't, I don't believe. I think we're seeing momentum trying to stall here a little bit and going from there. I'm going to flash over here. I've been pretty consistent just using TradingView here. Let me just flash over and get over to this. I want to look at the VIX at 14. I want to take a quick look at the VIX right now, and it's interesting. It's trying to start to climb up. I don't have. I should have brought this up in on TradingView, but I just knew this was here for me to grab. But this is. We're starting to see some increase. It looks like there's a potential little spike coming in the VIX. Nothing. It could be big. It's really not very predictable, but it does look like we're going to see some of that start to come in, and maybe we get above the 40-period moving average. That's at 1572 or 1419. Maybe getting back into 1819 handle. That would be about all I'm talking about there from that standpoint. Let's go back to TradingView. So this weekly chart, this angle of attack, though, is pretty bullish. And I've been doing some work, which I'm going to share with you folks. Once we get the indicators out and we get these SMAs out there, the predictive SMAs, and then also the probability indicator that's coming out, so I can show you what's going on. And it's funny, as long as I've been doing this, and as long as I've been using these indicators, I had an aha moment about 2 weeks ago, believe it or not, and I mentioned this before, using a 5-second bar chart on the S&P. And it's absolutely, I learned something about a couple things, the 200-period moving average, how these moving averages are really operating together. It's interesting because every 5 seconds you have another bar. I'll talk about that in appropriate time, but there's some really cool stuff that has come out of the validation and the working on the new indicators that I think is going to really help you folks a lot. But the bottom line is that this pattern, what I'm seeing here on the short-term 5-second chart, it actually projects out like around 2.5 to 3 minutes in the future. And these algos look like, well, they can't have much value. But what I'm seeing, and even now starting to see some patterns that are coming out of the algos in general, is that the markets tend to flow along the line that what you're seeing here. So it does appear that while we have a little minor dip coming, depending on, and these will update as we get actual real data as we start to look forward. But for the moment, it does look like we should get a dip, and we'll see how extreme it is. But that dip is coming maybe in toward, the into August or something like that, where all this is going to start to flow. And it would make sense after what we've seen this year. I mean, I don't have the numbers right in front of me, but S&P's up 16. We're up roughly 31+% on the NASDAQ. It's time for some kind of rotation to happen, things to happen in that form, and possibly we'll be able to detect this stuff out of the database as it comes. So for the first time, you folks have heard me a little bit cautious here. There's still an upside bias, but there's some rotation, I guess is the best way to put it. There is some rotation about to occur. Let's go ahead and get into the NASDAQ. So here's the crazy thing, though. After saying everything I just said, we bring up the weekly NASDAQ, and this thing just is climbing, and projecting most likely that we're going to continue higher. So what it's probably telling us here is that the NASDAQ's going to continue to be the stronger of all the indexes, and whether it's the AI bias, whether it's the FANGs, all the things that are going on, all of a sudden the NASDAQ's back in vogue, and you can't seem to break that pattern. And just looking, so we're starting a weekly. I'll go to daily here in a second, but the downside is going to be limited to this 10-period moving average that's out here right now. And right now that value is, just get that value. That's 13,595 is where that is right now. That is not the right number. Bear with me a second. Yeah, so it's going to be 14,523 is that number. So we're looking at this pattern maybe coming down and hitting this. Let's go ahead and go to the daily just to get a look at that. So we're getting the same formation we're just talking about. I ultimately think we do move down toward the 40, which is also the 10, roughly the same numbers. But remember, they're all rising. So right now, if you look at that number, you're looking at 15,527. It is not going to be, that number is rising every day. So just going out 10 days from now, all of a sudden you're 200 points higher. So watch that angle of attack, watch those lines on this 40-period moving average, and you can see that the algos have broken down pretty substantially and suggesting that we're going to get through the 21. We bounced off of it. I told you about, I guess it was about 5 or 6, 7 days ago, that there was going to be a tradable bounce off of that 21. The next time should be a penetration and follow through. And like I said, I'm hung up on this theory that we're going to end up at that 40-period moving average. It's not really, like I said, it's not going to affect you folks that are using Wavetech or running your portfolios. That's not going to be a material effect. But on these indexes, this will maybe start a minimal type correctional phase that we need to go through to even have a chance at unwinding and maybe seeing something move forward as we come into, let's say, end of August, September. So I think it's going to get really interesting. So at least this year, last year in August, I left and I went to Europe and Dubai. So I'm not going to leave you this time. I will be around this time this year in August when we get there. So just expect that we will be seeing this type of formation as we go forward. All right, so this is an interesting daily Russell. We're getting this kind of a zigzag formation here. What's interesting is, and I discussed this on Sunday, where we were talking about this angle, but everything is just flattening out, losing momentum. Looks like we're going to do some backfilling in here. PPMs are not exciting. We're not getting anything that looks like some kind of acceleration. that's going to happen. And I flip over here to a weekly, you can see we're really just locked in that sideways range that we're in. So as we go forward, though, I fully expect that we will stay above these averages. We're probably looking at 1828 is around some pretty good support, 1820, right in that range. I think we just continue to chop around in this pattern here. So I just don't see this really making any kind of substantial move out of here, but I do see it staying stable. That's about all you could say with this right now. And maybe at some point in a couple of weeks, we'll go in and we'll dig into some of the banks and some things that go on. So here we go. The 10-year is printing up. All of a sudden, we're printing at 394. Let me put something back up on screen here, folks. Let's grab and let's put the fib projections up here. Those are important. I was talking about those for a while, and I've been also discussing that I believe the interest rates are going to continue to move higher in this pattern. We're getting very close to fib target 1, which is 401. We're printing 99. I think there's still some upside here, but we're coming into a peak somewhere probably around this 4% level. We'll take a look at the 2-year has had a more predominant kind of uptrend and upward bias. But we're starting to see some of these things happen. I was talking about all the boats rising, where the front end of the curve is rising, but the back end is going to start to rise as well. And this right here has caught a whole lot of people in a bad trade. And I won't mention any names, but a friend of mine is screaming, hasn't had a good day yet and being long TLT. The point is that what we're seeing here is this thing has continued to wind up. This is a weekly chart. I'm going to go to monthly, and I do want to bring this up because those of you that have been around, especially if you have the indicators, you know about this dragon head formation. This usually resolves itself to the upside, and I'm going to put a but on there. If you look at the algos are suggesting that we're hitting peak values. So I think we could move back into this pattern. We could rise up toward this 21 period moving average. And I'm going to put, this is a monthly chart, so I'm going to put a very broad range of expectations of around the high end of at least 402, the possibility of getting up as high as 413. And then on the downside, we're really looking at that magical 360 number I've been going on and on about. So let's go over to the 2-year. I'll leave it here on the monthly for right now because I have not looked at this 2-year with you. But we had this was really interesting. So the Fibonacci targets, if we go back to September of 2020, this is interesting. We had Fibonacci targets for 254, 347, and 405. And that's why I always mention these fib targets, because you don't think, at the time yields were 0.12. Okay. Here we are getting these crazy projections like, yeah, whatever. Well, here they are being satisfied as we came into September of last year. And now we're just seeing consolidation, slight bias to the upside. Monthly chart we're looking at. Let's go down the scale now. Let's do top down. Looking at the weekly chart, we still have that upward bias I've been talking about. That should last for 2 or 3 more weeks, probably taking us into the Fed and into that, I believe, it's the 20 25th. I'm not sure that's the right date, 24 or 25 of July, where the next Fed meeting is. So just look for that to be the point where everything is probably going to peak out, and whether the markets start to believe that's the last one until a meeting well into the fourth quarter. We'll see what happens and what the effects are from that standpoint. So I think what I'll do tonight, I'm going to reveal a bonus. I'm trying to figure out how to put this out. I found something in some of my old work going back like 5 years ago, but I'll show you here in a minute. I should have showed you during the S&P, but that's what we look like here. Let's go ahead and get into crude oil. So still on weekly, been talking about this weekly trend. We are bouncing around inside of this market grid. So we're back to the 10-week moving average. Looks like it was being forecasted we get a bounce here. Now what we look like, we should start to peak out. There's a new Fibonacci target here, which I just showed you why I mention these, even when they seem absolutely ridiculous to talk about. But right now, those numbers are 50, 55, 17, 47, 57, and 42.88. So I have to mention those. Brand new, just came out, and these you can see the algos are rolling over. So I'm a little bit leaning that at least we'll test the lower end of this market grid. This may end up to be what I call an island projection. I'll just update that as we go through it, but I don't want to not mention it. I think it's too important to do that. Let's take a real quick look at the daily and just get a feel for that. A daily's got some fib targets. We did get a RTX close yesterday, I guess technically today, and this is overnight prices that we're seeing right now. All goes pretty flat, nothing really going on. I suspect that we're really just going to maintain that support. I've talked about this a number of days ago, right at that 69, 67, 50 level. It's going to be your floor. And then we do have fib targets on the upside now, 72.97, 75.23, and 76.63. So these are really, like I said, the algos aren't giving us any kind of anything in here. When we look at the dailies, the real dominant is what I was just showing you is the weekly charts, and they have some serious overhead resistance and still a predominant longer term and intermediate term downtrend that is really driving prices at this level. All right, so we'll stick with the daily charts here coming in. Gold still being projected lower. You can see the algos, the SMA projections, the forecast is still for down. PPMs flat, flat, flat. The real place to look here is the intermediate charts here on the weekly. Still have fib target down here at 1858. But I still think the 40 period moving average here in gold will ultimately be hit. Right now, that number is at the 1877 level right at the moment. So we're just seeing this rising pattern. I think if you were drawing trend lines, which I don't, but on this configuration here, the little wedge that you're seeing with the rising 40 and the declining 10 that's being forecasted is probably where we stay within those bounds for the next several weeks with a downward bias, I think. And then ultimately after that, we should start to see at least a potential to run back up toward the higher end, toward the maybe 1940, 1960 level, and then we'll see what sets up from there. But I think we'll at least if we can hold, we continue to hold 1900 and we don't get below that, then we're likely to see at least that number back into 1940, 1960. All right, so final market, Bitcoin. This is a weekly Bitcoin. Still being projected to the upside. Let me just see if I can rescale this a little bit. You can see that big upward, what's being forecasted anyway, this big upward surge. See PPMs are suggested that we're going to see a move to the upside. So this is the weekly Bitcoin, and it looks actually really strong, but it doesn't mean that it can't come down to this 10-period moving average. It's around 20, right now, 28.16 level. That's probably the range we're looking right now at 30,406, but that's going to be your buy point there. Let's take a quick look at the daily, and we do have some fib targets on the daily, but we have negative PPMs. This may end up being an island, but we're looking at 36.2, 38.7, and 40,000. But looking at the weekly is also suggesting we're going to see higher prices here, but the algos are just not in sync at the moment. So the next couple of days, it looks like we could challenge the 21. The 40 could be in play here just due to the current configuration in the algos. Okay, folks, that's going to do it for tonight. Like I said, please know that I am going to do my best to set you up tomorrow. Unfortunately, no way I'm going to be able to be here until next Thursday. So it is what it is, as they say. So we'll be around. Like I said, I'll do my best to put some things out on Twitter if I can to keep you in up to speed. But tomorrow's video is going to be really, really important. So I would make sure you get that. You can always watch it. It'll be there for a while, but I am going to do my best, like I said, to set things up and try to get maybe some parameters for into mid-July, which is where we're going to end up by the time I get back in the saddle, so to speak. So anyway, thanks again. I didn't get a chance to look at any comments that any of you made. I'm looking at them right now just to see if there's anything there. Yeah, so anyway, thanks, folks, for coming. Just glance at a few comments, and I'm just going to leave them go. But I will be here tomorrow, same time, and we'll get things set up. And I appreciate everybody's patience for everything, for the release of the indicators. We've gotten just tons of emails. I appreciate everybody's interest. They're coming. So I will talk to you tomorrow, same time, same station. See you then.